All right, hey everybody, this is John, and welcome to the free video. And it's been a strange couple of days because Wednesday went to basically 100% cash, stayed 100% cash all weekend, and was 100% cash today. And just kind of watching this crater. And most of the time when the market's falling, I like to get aggressively short. But the thing about August is that made more money trading in August 2020 than any other month in the history of my trading career. And when that happened, I want to take some time to kind of like, all right, let's just catch our breath. And so the best way to catch your breath is to go flat. All right. So now the question is like, all right, now I've caught my breath. What do I want to do? What do I want to dive into? So for the cues, the main thing to keep in mind here, and I always like to use the analogy of, when the cattle break the fence, they go to the next one. So tomorrow morning will be pretty important because we're sitting right on that 55 EMA. And if we go back and we look at March, okay, if you guys remember March, seems like a long time ago, right? But if you remember March, once we close below that 55 EMA, the selling truly accelerated. And there was one last gasp rally back to the 21 before the puke. Now, is something like that going to happen again? I mean, I don't know. So that's the thing. And you never know, but you know not to fight the trend. You know to go with it. The other thing I'm looking at here is that when we did sell off in March, okay, you can see how overbought we were here, and we basically sold off until we got to the weekly oversold, right? So keep in mind that if that's going to happen here, the amount of decline it will take. Last but not least, there's a lot of people along this market. There's a lot of new people along this market. Have they ever seen a decline before? In many instances, no. So I suspect there's going to be a lot of margin calls. So I'm looking for more of a continued puke on Wednesday morning, and then if we get some margin calls, then potentially a snapback rally to here. I don't think at this point that we're going to be seeing new highs anytime soon, and in fact, I think we are going to see multi-month violent chop. And that's what we're in for. And that's okay. There's plenty of ways to trade it. So what are some good ways to kind of follow this kind of market? Okay, so on Wednesday at 7 o'clock Central, I'm going to be talking about the exact strategies that I've been using this year. It's been my best trading year ever. So not only capitalizing on the moves that we've made so far, but also kind of getting out at the top and going to cash and having a very stress-free Thursday, Friday, and today, Tuesday. And yeah, I know you probably see something like this and say, yeah, anybody can say that. Where's the proof? Okay, so here's my account. It's live. You can see that the clock's ticking right here. Okay, so this is not a screenshot. I just kind of covered up my account number there. So my P&L year to date is now, it's actually higher. It's $13.1 million. Now you'll notice that my account balance is less than that. It's because I've wired out money. So I've wired out, the best way to protect yourself from the market is to wire stuff out. I did pick up some NKLA today, but you can see I'm largely in cash here. And so the question is then, what am I doing here? I mean, I've been doing this for a long time, so how did I mean, because I obviously don't know exactly what's going to happen next, right? We're traders. But there were some signals, especially in August, when it made sense to trade bigger. Okay. And then, but it's how to time that because it's stressful holding on to bigger positions. But more importantly, when to quickly bail. Okay, so I had plenty of trades that didn't work out in August. All right, but I still had a great August. And then my strategy is basically wiring out 2.5% a week and then letting the rest of the profits remain. So exactly, how do I do that? How does it work? And why psychologically it gives you an edge, okay? And then why diversifying with too many trades is for suckers. Now, I don't mean that to be offensive to anybody who believes in diversification, but the idea is that if you diversifying is for preserving wealth, concentration is for creating wealth. I trade to create wealth. Okay. I did I've done four, I think five now Tesla trades that were over seven figures. And again, it's not about Tesla, it's about the pattern that I recognized. And then last but not least, and what's not on here, is why I went flat on Wednesday of last week and stayed in cash, and then the market just puked. And I've been able to preserve my gains. So anyway, that's what I'm going to be talking about. So 7 o'clock Central, Wednesday, September 9th, and just showing you the tools that I use, my rationale, the timing, reviewing some of the trades, and get you guys set up for what's going to be a crazy volatile rest of the year. All right, so let's knock it out of the park. You guys have a good one, and we'll see you at the next update.